Financial accounting 1, and this is our introduction. Okay, now look at the introduction. Accounting. There are, accounting bodies across the globe. There is European accounting bodies, there are European accounting bodies, American accounting bodies, Australian accounting bodies. Okay, and every country has they it has their own it has its own accounting body. And when you look at India, accounting standards board sets the accounting standards, and the accounting standards board is part of Institute of Chartered Accountants of India. So these bodies, these statutory bodies, they are responsible for making the rules and regulations how to treat business transactions and record in the books of accounts. Okay, and one such accounting body is American Institute of Certified Public Accountants. American Institute of Certified Public Accountants. Those who get qualified in the examinations that they conduct, they will be given a qualification, a certification called CPA, Certified Public Accountant. And that is similar to our Indian CA, Chartered Accountant. And who gives the Chartered Accountancy certificate in India? It is the ICAI again. ICAI, Institute of Chartered Accountants of India. Okay, right. So now some of the content and part of the content is drawn from the material developed by CA Institute in India and CPA Institute and CMA Institutes, and some of my own opinions are added, right? So that is how this information is drawn and put before you. Now let us look at the definition of accounting. Look at the definition of accounting. Can any of you read this definition? Akshita, can you read it? Yes, ma'am.
The process of identifying and measuring and communicating economic information to permit informed judgment and decision by the users of the accounting.
Yeah, the process of identifying, measuring, and communicating economic information to permit informed judgments. Okay, this is Accounting Association, Indian Accounting Association. So the associations are not, they are not statutory bodies. Okay, even in India, we have Accounting Association, Indian Accounting Association. Okay, Indian Accounting Association. I'm the 181st member of this Indian Accounting Association. All right. So this is not a statutory body, but ICAI is a statutory body, and likewise AICPA is a statutory body. Look at the definition of AICPA. Can you please read it, ma'am? AICPA's definition, the first one. Are you able to see, Akshita?
Yes, sir. Accounting is an art of recording, classifying, and summarizing.
Number one, recording. Number two, go ahead.
Classifying.
Classifying. Three,
And summarizing.
Okay.
In a scientific manner and in terms of money.
Okay, in a significant manner in terms of money. Okay, so there are three steps: you're recording, classifying, and summarizing. Recording, classifying, and summarizing. What are you recording? You are recording transactions which carry the monetary value. Okay, events which carry the monetary value. Not all transactions. Not all transactions. Let us say the director or managing director or accounts manager has a friend. They both go out and they will have a cup of tea. Okay, he cannot produce that bill, right? That is a social gathering. He's an accountant, but he has a guest, and for which he has paid that is not a, that is not a, the transaction which has to be recorded. That is his personal. But if a customer comes and you offer a cup of tea, right, that can be accounted, because that has, influence, that has influence in the business, right? So, when you spend on the customer is going to give you revenue, is going to give you income. So therefore, what you spend for him is accounted. Whatever it is, all social interactions are barred from recording here. All the, transactions which do not carry monetary value. Let's say the loyalty of the employees of that company are very loyal. What does it mean? The employees of that company are very loyal. Can you record their loyalty? Can you record their loyalty?
No,
No,
sir.
No, sir.
cannot record. But their loyalty may be the main reason for the success of the organization. That may be. But since you cannot convert into money terms, you cannot record in the books of accounts. Okay, so therefore, let us come back. Accounting is the art of recording, classifying, summarizing in a significant manner in terms of money. Okay, transactions and events which are in part or at least of a financial character. Okay, at least if not fully, partly let it have financial character. And finally, what for you doing all these things? To interpret the results. Okay, who will interpret the results? Whoever is in need of this money, this information, they will take that information and interpret according to their situation and need. For example, the banker, the way the banker interprets the financial data, the balance sheet and the profit and loss account is different, because before giving you loan, he will go through all your accounting books, financial statements, income statement, profit and loss account, whatever is called as income statement, and the balance sheet. They will look through your accounting books and then they will take a call whether to sanction your loan or not. Okay. And when you look at the employees, their interest is different. How best, what are the salary status for them, whether they are going to get salaries, or will there be any increments, will there be any bonus? Okay, so it is their concern. The way they look at the books is different and they interpret is different. And the way that investors, the shareholders, look at the same thing is different. How best, I'm going to maximize my return on investment, ROI. So therefore, the accounting information is recorded, classified, summarized, and kept. And that is used by different people and interpret according to their need and situation, right? So let us come back. Accounting is the process of recording, classifying, summarizing. Okay, the money transactions or business transactions. Okay, for what? For making interpretations and decisions. All right, so this is the definition of, okay, accounting. Process of recording, okay, process of recording, classifying, summarizing. These three terms, listen, these three terms you must put in your definition. You must put in your definition: recording, classifying, summarizing, and finally interpreting. Okay, so 3 plus this fourth one, you must keep these three terms. The wordings can be, if you slip some of the words, that's okay, but these four terms must be there in your writing when you're writing the exam. And not only exam, when somebody asks you also, you must be able to answer. Hey, it's a process of recording, classifying, summarizing money transactions, business transactions, for the purpose of interpreting and taking decisions. That's how you should be able to say. Okay, right. So these two definitions are popular definitions. Therefore, I have inserted these two definitions only. Okay, I found these two definitions to be more worthy. So therefore, I kept these two. Textbooks, when you see the textbooks, they will pile up 10, 15 definitions, right? So that will only confuse you. Better you remember these two, or at least one you must remember. right? Okay. Then objective of accounting. What's the purpose of accounting? What is the purpose of accounting? Please remind me when we are exceeding the time. Okay. Uh, at what time should we stop? 9:40, right?
Yes, sir. 9:40.
We'll quickly just finish this objectives of accounting. Now, number one is providing the information to the users. Just now I told you the bankers, the investors, the employees, the managers. Okay. So for them to make their own interpretation, you need to give them accounting information. Okay. And when the data is haphazard, that has to be streamlined, systematized. Okay, accounting is a systematic record of the transactions, classifying the same and summarizing so that you get the result of those transactions. What's the result? To know the profit or loss. This is the third objective. Okay, then finally to know the position of liabilities and assets. The liabilities, equity shares, okay, preference shares, debentures, bank loans, creditors. What is the status of those liabilities and what is the position of the assets? So to ascertain the financial position, to make out the result of business operations, okay, to make a systematic record of transactions, to provide information to all the users, we prepare the books of accounts. This is the objective with which we prepare the books of accounts, right? So please go through, okay, please go through this document soon after your class or maybe by evening. Now, functions of accounting. We will just again maybe having a recap, right? So what the accounting does? Yeah, we can make out whoever is making annotations. Okay, so there is, yeah, it is indicated. Not to embarrass you, we don't want to, you know, call out your name, right? So you must immediately, yeah, you must immediately remove it. Okay, yeah, please do that. Or should I, yeah, remove you? All right. So, we don't put you in embarrassment and you don't yourself put in embarrassment, right? Okay. Right. Measurement, forecasting, decision making, comparison, and control, and government regulation. Okay. So, accounting performs these functions. Okay, accounting performs these functions. Okay, so we will go through this once again. Then there are three branches of accounting: financial accounting, cost accounting, and management accounting. The financial accounting information is a public document, public information. It has to be put in the website or it has to be published, whereas the cost accounting information is private as
So
well.
the time's done, sir.
Yeah, thank you. So the management accounting also is a private information only for the purpose of making decisions. Okay, so we will close it here.
So this will be in the Moodle app, no, sir?
Yes, yes. What all I'm discussing, it is there in the Moodle. Okay.
Okay. Thank you,
Right.
sir.
And it is good that you listen once and go through the document. It's easy. Let me tell you, it's easy. It's
Yes, sir.
so easy, so simple. Right. And don't worry, those who are coming from non-commerce background, don't worry that, it is accounting. No, no. I have made it very simple and easy, right? You will enjoy it. Right, Ma, take care. Good day.
Thank you, sir.